Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, February 13th, 2018. I wanted to take a look at the IBB today. This is the Biotech ETF. A lot of people have asked me about, is it going to go back to the highs? Is it going to make new highs? Is it going to break down? And really what you can see here from the chart over the last 6 to 8 months is that it has been a wild trade, generally trending higher though. All right, generally trending higher, and you can see that. So if you go back here kind of almost a year ago, it was trading down here around 90, then it went up, then it came down, then it went up, down, and kind of chopping until the latest run up, and then obviously we had the market collapse that took it down sharply here. So the question is it going to continue this kind of choppy sideways to up move, or are we going to see a bigger breakdown? And from this chart alone, honestly, you don't get a whole lot. You get that it's been in a choppy sideways to up range. That's about it. So what do you have to do as a trader? I mean, this is so important. I can't stress this enough. As an investor or trader, you need to be understanding of time frame analysis. What is time frame analysis? Time frame analysis is where you look at one time frame and then you go to the next bigger time frame. And then you go to the next bigger time frame after that. And the reason you do that is because you need to be able to view things on a larger scale. Has anyone ever told you guys that, when you have this tunnel vision on something like a problem and you're trying to solve a problem and you have tunnel vision, you sometimes can't solve it. You're not seeing the whole picture. So what you need to do is you need to step back and see a bigger view of it, and then all of a sudden the answer can come to you. Same thing is true for charts. So what I'm telling you here is that, it's great to look at the daily chart, which is what we're looking at here, but before you make an investment decision, a swing trade or a longer term investment, look at the bigger time frame. The bigger time frame can either confirm your view or it can negate your view and give you an alternate view. So in this case, when we're looking at this chart, you can see we're at the 200 moving average here. Generally, we've been in a sideways to up move. So just looking at the daily chart, you would say, okay, well, I expect it to kind of move up, maybe chop around, maybe eventually make higher highs here and continue this trend. That's what you see on the daily chart. But let's go to the weekly chart and just see what the weekly has in store for us. And this is really, in my opinion, where things start to change. So here's your choppy sideways to up action, right? But what concerns me here is that you had this big pop back in the 2015 range, and then you had this big collapse. And what's now formed and what we see here by looking at a bigger time frame is that this is actually an inside bar bearish flag of consolidation. So even though it's been trending up, and from here, yeah, you've made money, but what this is telling you is that the larger picture is showing that probably in the next 6 months to a year, you will start to see a major breakdown in the IBB. And again, a pattern like this, and I can't stress this enough, when you have a sharp move down and then it kind of chops sideways to up, this is known as an inside bar bearish pattern or a bear flag. It's an alternative of a bear flag, really, but that's the pattern here. And again, because you're looking at such a big time frame, it still goes sideways to up for quite some time. But what it tells you is that eventually a breakdown is going to occur. And notice how it's been hammering on the 200 weekly for a long, long time, and it just basically kissed it again right here. This tells you that eventually this moving average is going to be so weak that it's going to give it forth. Think about a door. My greatest analogy for a moving average or a resistance or support level is the idea of you guys out there, each one who's watching this video. What if you had a door in front of you, a wooden door, and you needed to break it down? So you might hit it 1 time, 2 times, 3 times, 4. I mean, you might hit it multiple times and run into it as hard as you can, and maybe it doesn't break down, but I'll guarantee it's weakening, and there will be a point where if you hit it enough times, that door breaks open. And at that point, that's the equivalent here of the 200 is just weaker and weaker every time you hit it, and then ultimately it will break down, and you'll see the collapse to the downside. So short term, over the next 6 months to a year, I would actually anticipate an $80 handle on the IBB, which is actually a pretty big drop. That's about a 20+% drop on this. Now, I want to stress that in the short term, this could go back up. I mean, really, as long as you don't take out this high pivot, this can stay in this range. But what this is telling me is that because you have this inside bar bearish pattern formation, eventually this is going to break down. So my recommendation would be to stay on the sidelines until you break the 200. So notice how the 200 is pretty close to current price. I mean, we're at 107 right now. The 200 moving average is kind of right around 101, 100.5. So, there's no real need to get on the short side this second. Because in all fairness, I actually think the market could float up a little bit more in the short term before we see the next wave of selling come in. But the point is that once it breaks this 200, that's where you're going to see the major breakdown. And you'll go from $100 at that point, or 101, or wherever this is, all the way down to 80 probably within a month or two. I mean, it will be a fast and furious sell-off. So again, this is why it's so important to see the larger time frames. And what we can even do is we can even go to the larger time frame beyond that, the monthly chart. And here you can see that pattern, same pattern, but it's even more pronounced, the bearish inside bar pattern right there. And notice how you can barely see it here, but you have the 20 moving average and the 50 moving average on the monthly chart right at that same 100 level. So that's confirming the break point that I just gave you guys before at around $100. So when this gets below 100, that's when the floodgates open and you'll head right to $80, probably lower later on, but in the short term, $80 would be your downside target. And again, I stress, don't act on it, in my opinion, until you break 100. But once you break 100, you could buy some puts. You could buy, you could short the IBB. You could buy the double or triple ETF on the short side for the Biotech. I mean, it's really up to you guys how you want to trade it at that point. I'm just here to kind of educate you and give you the trade setup out there. And by the way, folks, if you want proof in the pudding of the analysis that we do here at InTheMoneyStocks.com and the trading, I mean, simply just go to InTheMoneyStocks.com and put the track record up. In fact, I'm going to do that right now. I want to show you this, guys, because this is the track record, and I'm proud of it, and that's why I'm showing it to you, to be honest. So again, here's the track record. Sorry it took me a little time to get it into focus. I wasn't planning on showing it, and it's being annoying. It's not letting me keep it there. But bottom line is, here's the track record. And you can see it on the chart here or on the screen. And this is this year. And these are all of my trades here on the track record for this year. Look at how many there have been. I've had two losers. One, I got caught in Netflix when they reported earnings, so I had to stop out for about a 20% loss. That's not great to do, but honestly, it happens. If you're a swing trader, every once in a while you get caught. But who cares? Because look at the net gain. Even with those losses, there's two losses on the year, and look at all these gains. Enough to net 104% right there. Pretty amazing, folks. I mean, this is just an incredible track record. Only two losers the entire year out of 2, 4, 6, 8, 10, 12, 14, 16, 18, 20, 21. 21 closed out trades in 2018. And again, just two losers. So I always say I bat generally 80%. So 80% of all the trades I put out are winners. And here it actually is higher than that so far this year. But that's because it's been a fantastic swing trading year. And members in the Research Center are just killing it. What you can do here is you just go to Research Center right there, and you have a free trial, 7-day free trial right there. You can also do the intraday stock chat 7-day free trial if you're a day trader, or if you're an options trader, go to the options alerts. There's no free trial for the options because we're just killing it so much, and options just make you so much money that honestly, listen, you want to do options, just take the damn service. I mean, it's really that simple. But again, bottom line is we're here for you. You can see the analysis I just did on time frames. That's really, honestly, that's something that we would, learning the time frame analysis and how important it is to look at larger time frames is a golden tip right there. I mean, that I cannot stress how important it is for you guys. So again, bottom line is come to InTheMoneyStocks.com. If you take the 7-day free trial, I'm telling you, people last week alone probably made $5,000, $10,000 on small accounts because we nailed so many of those trades. I mean, literally last week, all these trades were taken last week, folks. All of these right here. Look at this. They were all taken last week and closed out last week. 10.5, 11.6% gain, 14.54, 13.24, 5.23, 12.8. I mean, all of these last week, folks. Incredible. Absolutely incredible. So again, get involved, get here, make money. This is the type of market that you dream about in terms of swing trading. While every average person with a 401k and doesn't know what they're doing is getting slaughtered in this latest market dip, we are maximizing profits. Talk to you soon. Take